Hey there, welcome to the show today. We are so glad you are here as we talk about managed IRA versus self-directed IRA. This is the College Investor Audio Show. If you want to go ahead and hit subscribe, we would be greatly appreciative of that. You can also share this podcast with you and your friends. We would also greatly appreciate that as well. You can also check out thecollegeinvestor.com or follow us. We're all over social media. Just type in the words The College Investor and you'll find us. Pretty much anywhere you are, we're there too. We'd love to come alongside of your journey and help you out. All right, so today let's dive into this. A managed IRA versus self-directed IRA. When it makes sense to choose a self-directed IRA. Peter Thiel famously has a Roth IRA with more than $5 billion in assets. Huh? So unless rules around the account change, he will enjoy tax-free growth and tax-free distributions on these $5 billion in assets into perpetuity. But he's not going to live that long. Anyway, Thiel's account started small, just a $2,000 contribution composed of pre-IPO PayPal stock. So PayPal, which proved to be a unicorn, went public the following year. He further grew the account through further angel investing. So Thiel's Roth IRA was no ordinary IRA, to say the least. He used a self-directed Roth IRA to invest in private stock, an alternative asset that most custodial companies just won't support. So keep that in mind. This is a very rare case. If Thiel had taken the standard financial advice to invest in index funds inside a retirement account, he would not have billions of dollars of tax-free assets today. So by leveraging a self-directed IRA or SD IRA, he's built extraordinary wealth without paying any taxes. But that doesn't mean you should do the same thing. So today we explain the differences between typical IRAs called managed IRAs and self-directed IRAs and when you should choose one over the other. Okay, so what is a self-directed or SD IRA? Let's take a look at the definition. So a self-directed IRA is an individual retirement account, of course, that allows you to invest in a wide variety of alternative assets. Things like real estate, privately held stock, like PayPal, cryptocurrency, land, and other assets. If you have an SD IRA, you can invest your money into almost any legal asset. SD IRA custodian companies hold the assets inside of your account. SD IRA administrators take care of the administrative needs of the account, such as reviewing transactions to ensure you don't run afoul of any laws and preparing account statements. SD IRA administrators might take care of certain tax filing requirements for you. So, for example, they may file a Form 5500 on your behalf. This reports on the annual change in assets inside the account. Even when your administrator files this on your behalf, it's really up to you to work with the tax professional to understand the tax implications of your investments. Okay, let's contrast that with managed IRAs. And they only allow investors to invest in financial assets like stocks, bonds, mutual funds, ETFs, and cash. A lot of brokerages allow you to open an IRA for free. These companies charge very few fees, and they offer excellent service for sure. But the big brokerages won't allow you to put private stock or a deed into your IRA. They limit you to publicly traded assets. SD IRAs and managed IRAs are subject to the same annual contribution limits. The low limits, $7,000 in 2024, didn't stop Thiel from becoming an IRA billionaire. But if you're a real estate investor, you might want to wait until you've built up a large stash in your IRA before switching to a self-directed IRA. Both self-directed IRAs and managed IRAs offer traditional and Roth versions. The traditional version of the account allows you to take a tax deduction when you contribute to the account. Investments within the account grow tax-free, but you will pay ordinary income taxes when you withdraw money from the account. The Roth version offers no upfront tax breaks. However, the assets inside the account grow tax-free, and they're not even taxed when you take those distributions. Let's compare the costs between self-directed and managed IRAs. So when you open a managed IRA, you will pay no account opening fees. You won't pay for bookkeeping, and you won't have to pay to get tax forms each year. You might pay a small trading fee, but our favorite brokerages don't charge these fees or any other fees. Compared to a low-fee conventional IRA, self-directed IRAs are loaded with fees. Rocket Dollar, a low-cost leader in the SDIRA space, charges a $360 setup fee plus $15 a month for account management. Different SDIRA custodians have different fee structures. Some might charge on a per-investment basis, others charge a share of assets under management, and even others charge based on transactions. No matter the fee structure, you can expect to pay hundreds or thousands of dollars each year for your self-directed IRA. Let's take a look at self-directed IRAs that complicate owning alternatives. Okay, so over the past several years, we've seen tons of companies actually start to offer alternative investments to Main Street investors. Many of these companies use crowdfunding legislation to just open up investment opportunities to people who struggled to access real estate, art, cryptocurrency, and other alternatives in the past. While technology and legislation have made alternative investing easier, most investors really should avoid investing in alternatives inside their retirement accounts. Alternatives tend to be riskier than a lot of other investments, and retirement investments are designed to secure your future. In general, alternatives should help you diversify your portfolio, for sure, but they shouldn't dominate your investment accounts. Even if you are a successful alternatives investor, you can easily run afoul of the rules when investing in a self-directed IRA. Quick example, you can't maintain a property yourself. You have to hire someone else to take care of the property. Or you might owe taxes when you sell certain metal coins if they're deemed to be collectibles by the IRS. So SDIRA custodian and administration companies kind of help you stay on the right side of the law when it comes to investing inside that account. But you might find that it's easier and a little less costly to hold your alternative investments outside of your retirement accounts. And that leads us to services offered by SDIRA custodians and administrators. SDIRA custodians and administrators historically did a ton of work for self-directed investors. In fact, these companies may have even written checks to pay for toilet repairs at your real estate property. The rise of checkbook IRAs, if you will, has simplified SDIRA administration. These allow you to pay bills or even make transactions on behalf of your investment company. However, these companies still do a lot of work for you. They do record keeping, review transactions, and ensure that all your transactions are allowed and that your assets are properly titled. Many help you set up an LLC when you first open the account. These companies will also do some limited tax form preparation for you. They will file Tax Form 5498, which tells the IRS about contributions, distributions, and the fair market value of assets in your account. Fair market value reporting is especially important since you may hold tangible assets that are difficult to value. Your SDIRA administrator will also send you a tax form 1099-R if you take distributions during the tax year. Some SDIRAs, those that invest in active real estate, for instance, such as real estate development, or those that even use debt, have to file a 990T, which is for unrelated business income tax. The SDIRA administrator will prepare and file this form for your IRA. Even with all this help, though, you might need to enlist the help of a financial expert to ensure you fully understand the tax implications of your investments. Okay, that was a lot. Kind of a fire hose of information on all this stuff. So the magical question here is, should anyone choose a self-directed IRA? Given the substantial costs, kind of hard to imagine that many regular people should open an SDIRA. It kind of makes sense to consider a self-directed IRA when you have a good chance to see massive growth in an investment, like PayPal. If you own stock in a company that might go public, you might want to put that stock in a self-directed Roth IRA. If you want to use your IRA funds to buy a large piece of commercial real estate, a self-directed IRA is definitely the way to go. But before you dive into an SDIRA, make sure you're being realistic about the risks of your investments. Most people aren't real estate moguls, tech geniuses, or art connoisseurs. Your investments might go sideways or go to zero, and you still need to have a secure retirement. Remember that. So consider the downsides before you double down on risky investments. And that is our show for today. We hope it provided a little bit of clarity, but if you want to dive a little bit deeper on managed IRAs, self-directed IRAs, and all things alternative investments, please go to thecollegeinvestor.com. You can dive deeper right inside this article. We have resources and everything you could need to know about this. You can also ask questions, comments, anything like that. We'd love to talk to you. You can just follow us all over social media, search for The College Investor, and you'll find us. Thanks again for stopping by today, and we will talk to you again real soon.